However, last night, the president made conciliatory comments about Chinese leader Xi Jinping and the resurrection of the trade war, saying, quote, "It will all be fine." The bulls like all of it, think it's fine. So let's get right to the floor show. And Nathan Sheets, Citigroup Global Chief Economist. Well, are you fine with all of this?
You know, there's definitely a lot of uncertainty out there right now. The reality is that, China is the world's second largest national economy. And the U.S. is dependent on China for some key imports, including rare earth minerals. So when we get to this place where it looks like that the trade war between the two countries is going to escalate, that's something that captures the market's attention. But I think we were reminded today that President Trump is aware of that and has signaled, as he has in the past, that negotiations are likely. And I think that the markets are leaning in the direction, still a little bit uncomfortable, but leaning in a more hopeful direction than on Friday.
I mean, we just showed the Chinese stocks that trade here. They are roaring higher. Same with the trade-related stocks, anything technology. But when you listen to what China said after President Trump threatened the 100% tariffs over the weekend on all things Chinese coming into the U.S., China basically said, well, bring it on. We don't need your soybeans. We are fully stocked with soybeans from other countries now. We've changed our supply chains, just like the U.S. is certainly trying to change its supply chain. Do you see any threats to the economy and therefore the markets ahead on this?
You know, what is certainly true is that China is rewiring both its exports and its imports to reduce its dependence on the United States. I think in parallel, as you know, the United States is doing the same thing. So I think if I project this thing out over a 5 to 10 year horizon, can I imagine a world where the United States and China are fully decoupled? I think that is broadly a direction that we're moving into. However, for now, they still need us and we still need them.
You seem pretty confident about the U.S. economy. However, we are waiting on data, and some of it government-driven, so we're not going to get it because we are in day 13 of the government shutdown. We can look at the economic calendar and see what we won't be getting this month, and that would be September retail sales. We won't be getting, at least for a week or two, because apparently the government is saying we've got to get the consumer price index, that's the inflation number, out. So maybe that's going to come out the 24th. No jobless claims on Thursday, certainly. There are some things we will get because they're done independently, like Wednesday, we're getting the Empire Index, New York Federal Reserve indicators of regional, and then, housing market stuff, et cetera. But how are you at Citi rejiggering your supply chain of data now that you can't get it from the government?
Well, we critically miss the government data and our capacity to be able to evaluate, and candidly, the market's capacity to be able to evaluate where the economy is reduced. Now, one point that I think is very important is I think it increases the emphasis on the third quarter earnings reports that are starting this week.
Tomorrow,
and I'm going to be listening. I'm going to be listening to hear what do retailers have to say about margin pressures, about pass-through of tariffs. What are the AI firms telling us about ongoing AI investment?
Let me just say the bond market is close, so you're looking at an old price there. But at the moment, when we see that it hit a 3-week low at 4.148 at the so-called close on Friday, it's a little bit lower than that right now at 4.08. To earnings, I'm sure you'll be watching because Citigroup's reporting tomorrow along with a bunch of the big banks. You've got JP Morgan, Wells Fargo, Goldman Sachs, BlackRock, Bank of America on Wednesday, Morgan Stanley, PNC. Big names in financials. How do they look?
You know, I've got to be careful not to comment on specific names. But I think, broadly, the financial sector and the markets are continuing to look solid. And I think that in this environment, with a strong consumer, the financial sector is likely to continue to look strong.
In fact, the financial EPS expectations for the names in the S&P up 12.6% year over year. Overall revenues up 3.4%. The S&P itself is expected, all 500 companies up 8% year over year. I'll take it.
Yes, this is the key. We debate, are stocks overvalued? And at the end of the day, the answer is maybe, but you got to like the earnings trajectory. And these valuations are largely supported by the strong earnings of U.S. firms.
And I just want to say one thing, though. You also got J.P. Morgan announcing it's going to spend $1.5 trillion over the next 10 years on all things that are related to national security, whether that's U.S.-based energy, artificial intelligence. And aside from all of that, some of the technological names that are outside of AI.
Yeah. One of the huge takeaways from the pandemic is that economic policymakers and the corporate sector needs to focus more on, let me call it, essential security, which is national security, but even broader. And what do we need to be a more resilient economy during times of stress? And I think that is going to be a rich field for investment during the coming decade.
Gold is surging to a record high again. Is that a weird signal in some way, shape, or form?
You know, it may be a little bit of a cautionary note. When does gold rise? Gold rises on two kinds of circumstances. One, when there's concern about inflation, which doesn't seem to be front and center now, but there are some scenarios for the U.S. economy where inflation could rise. But secondly, during periods of uncertainty. And I think that is the other side of this, that there are still a lot of question marks about where we're headed, what policy is going to look like, and whether the economy proves durable. I'm optimistic, but I think that there's an ongoing debate.
Okay. We've got Peter Schiff, the big gold bug, coming up later in the show. You know him, right? I mean, he has a different take on that, but it's great to see you.
Thank you.
Thanks.